Given the prices of cars today, having the money at hand to make the purchase in one lump sum is usually out of the question for most people. Bad credit is likely to make this problem even worse, as financing for cars tends to be a product reserved for those who have good credit. People who have poor credit typically struggle with their finances, and in general have to deal with those financial problems versus the higher costs of a car loan. Financing for people with bad credit is starting to dry up in this down economy, increasing the number of hoops these consumers must jump through. While bad credit financing for cars comes with higher costs, it can help to improve a consumer's credit situation. Tighter lending criteria has led many financial institutions to define bad credit upward, irrespective of category definitions established by credit reporting agencies and banks. This means some lenders can look at a customer with average credit as having bad credit and apply bad credit financing standards to that person's auto loan. While this doesn't necessarily constitute fraud, it does create an atmosphere of distrust with the consumer, especially with a consumer that knows his or her credit scores. Within the FICO scoring system, there is a standard of how the numbers are defined, and it's in the customer's best interest to find out what these numbers mean. The FICO score is broken down into 6 categories. From 850 to 700, a consumer is considered to have perfect credit and is likely to be approved for just about any sort of financing at prime interest rates. Consumers with scores between 699 and 680 qualify as having good credit and will see loan approvals fast and interest rates comparable to people with perfect credit. Average credit, or non-prime, ranges from 679 to 620. While people in this category will not see significant increases in interest rates over prime or difficulties in loan approvals, they can be forced into a lower financing category if they're at the bottom of the average range, depending on lenders' criteria. Similarly, the borrower may find themselves being treated as someone with good credit if they're at the top of the average range, with a steady income and debt that is easily managed by that income. Scores from 619 to 580 qualify a consumer for low or poor credit. This is a range that offers a surprising amount of flexibility for borrowers at this level, since it has a small span and is usually the result of having a short history of using credit, a lack of credit accounts, or lack of varying sorts of credit. This is a range that can see interest rates on financing within 2 or 3 percentage points of prime, depending on what put that individual in that credit range, as well as that person's income and debt load. Bad credit begins at 579 and goes to 500. Interest rates for financing can climb more than 10% above prime and carries minimal flexibility with loan costs. Approval is difficult since lenders view people with bad credit as having a higher risk of default. In fact, most lenders have a cutoff in the mid-500s, where approval is automatically denied. Income levels and debt load can help to mitigate some of these costs and increase chances of approval, but there are no guarantees. Being prepared to secure bad credit financing with a large down payment can help push loan costs down, but not always. Rock bottom of the credit world begins at $499 and flows down to $350. Any sort of financing is almost out of the question, and a consumer who has fallen this low should spend his or her efforts on damage control. While a credit hole this deep is hard to crawl out of, it can be done through debt repayment, applying for secured credit cards, and reining in bad spending habits, as long as the consumer has no history of fraud. Being caught within the boundaries of bad credit, anyone can stop the hemorrhaging by controlling his or her financial impulses. Improving one's credit health before seeking bad credit financing must take priority in order to minimize costs and keep interest rates low. But life doesn't always wait for people to get their affairs in order, and bad credit financing for cars may be the only answer. In these cases, searching for the right financing is the only alternative and must be done through careful shopping and thorough understanding of how one's finances work. No one should make a mystery out of financing. Federal Auto Loan. Good credit, bad credit, no credit, all good.